It's not a complex thing to do.
President Donald Trump on Tuesday restated his push for the United States to take control of the Gaza Strip and resettle its more than 2 million Palestinian residents as he met with Jordan's King Abdullah. He had previously said the U.S. would buy Gaza, but on Tuesday used a less specific word for how the U.S. might acquire the Strip.
We're not going to have to buy. We're going to have Gaza. We don't have to buy. There's nothing to buy. We will have Gaza.
What does that mean?
No reason to buy. There is nothing to buy. It's Gaza. It's a war-torn area. We're going to take it. We're going to hold it. We're going to cherish it.
And he seemed to dismiss outright the idea that Palestinian residents might resist their own relocation.
Some people say this is ethnic cleansing. You won't be able to force them to leave the land.
We're moving them to a beautiful location where they have new homes, where they can live safely, where they'll have doctors and medical.
Nor was he daunted by the number of people he'd proposed to resettle.
That doesn't concern you that moving 2 million people from there?
It's a very small number of people relative to other things that have taken place over the decades and centuries.
Trump suggested last month that Egypt and Jordan should take in Palestinians from Gaza, a proposal both U.S. allies strongly oppose. King Abdullah has previously said he rejects any moves to annex land and displace Palestinians. On Tuesday, he avoided answering reporters' questions about his stance, saying he was waiting for what he said was an Egyptian proposal on Gaza.
How do you feel about the U.S. taking Gaza, as the president said?
Well, again, this is something that we, as Arabs, will be coming to the United States with something that we're going to talk about later to discuss all these options.
And Mr. President, take it under what?
Trump has said he would consider withholding aid from Jordan if it refuses to resettle Palestinians. Jordan, which hosts American air bases and is a key intelligence-sharing ally, is already reeling from Trump's 90-day pause in foreign aid.
A promise of a reset from BP as it reported quarterly profit of $1.17 billion on Tuesday. The 61% drop in the fourth quarter compared with the previous year made the results the worst since the same period in 2020, when lockdowns shrank demand for oil. It comes after news broke at the weekend that investor Elliott Management had built up a stake. The company's quarterly earnings were dragged down by weaker realized refining margins. BP joins other oil majors that experienced a decline in earnings throughout last year. They saw energy prices stabilize and global oil demand weaken following record profits over the previous 2 years. But BP has underperformed its peers, and pressure has mounted on CEO Murray Auchincloss to deliver change. Its share price was trading flat in morning markets. On Monday, it had rallied strongly on expectations Elliott's acquisition of an undisclosed stake would enforce change. Auchincloss has been working towards rebuilding investor confidence in the company. That's following the abrupt resignation of his predecessor, Bernard Looney, in 2023 for failing to disclose relationships with employees.
Coca-Cola posted a surprise revenue jump on Tuesday. Comparable net revenue rose 4.2% to $11.4 billion, above analyst expectations. The drinks giant also beat estimates for fourth quarter profit. Higher prices and resilient demand for its sodas helped out. The news pleased investors and sent shares up 5% in pre-market trading. The company has focused on capturing demand in emerging markets like India and sought to expand its portfolio in North America. Sales were also boosted by partnerships with value meal deals at fast food chains like McDonald's. Coca-Cola has benefited from strong demand for sparkling soft drink brands Fanta and Sprite, with their volumes rising 2%. The category makes up about 2/3 of the company's total volumes. Last week, rival PepsiCo reported a 3% drop in volume for its two biggest segments for the fourth quarter. Those include North America Beverages and Frito-Lay in the same region. Coca-Cola expects organic revenue growth of 5 to 6% for this year, which is at the higher end of its long-term target.
German voters heading to the polls in less than 2 weeks have the economy and high prices on their mind. According to a survey, German reinsurer R&V surveyed 1,000 Germans online between January 23rd and 25th. 70% of respondents said they worry about the rising cost of living, up from 57% in the summer. Another 68% said they feared an economic downturn. That's up from 48% in the previous survey. But while economic concerns topped the list in the R&V survey, people told Reuters in Berlin on Tuesday that immigration was dominating the agenda.
Für mich natürlich Wirtschaft, wie jeder einfach sagt.
For me, of course, the economy, as everyone simply says, but freedom, democracy, and everything. Of course, migration policy is also very important. Almost everything that people talk about.
Was die Leute sprechen, aber
And I think this focus on migration is really not helping anybody feel more positive in any kind of way. And I also don't think that by focusing on this issue, we can solve any of the other problems in the country.
Increasing competition from abroad, high energy costs, elevated interest rates, and uncertain economic prospects have taken a toll on Germany. The economy contracted in 2024 for the second year in a row. The dire situation is reflected in the country's storied auto industry, with Volkswagen and others cutting jobs as they look to remain afloat. Disagreements over how to save what was once Europe's economic engine led to the demise of Chancellor Olaf Scholz's three-way coalition last November and set up the February 23rd vote. The R&V survey showed more than 6 out of 10 Germans consider politicians in both the government and the opposition to be overwhelmed by their tasks. And 3 out of 4 are worried about the polarization of society, up from 48% in the summer. The director of the study said the sharp increase is attributed to a series of high-profile killings in public spaces by people with an immigrant background and how the parties reacted to them.
Gold prices soared to a record high on Tuesday on safe haven demand. The surge came after President Trump imposed fresh tariffs on steel and aluminum imports, and increasing concerns it could fuel inflation further and escalate the potential for a global trade war. Spot gold was up 0.3% during morning trade in Europe. It had hit a lifetime high during Asian trading hours of $2,942.7 per ounce. Trump raised tariffs on steel and aluminum imports to 25% on Monday, increasing the risk of a multi-front trade war. The metal has logged its 8th record high so far this year as investors grapple with the uncertainties around US trade policies. With a gold rush somewhat underway, it brings the $3,000 milestone into view. Bullion is considered a hedge against inflation. Traders will watch Wednesday's US inflation data for fresh clues on the interest rate outlook in the world's largest economy.